Welcome back, traders. In today's analysis, we're uncovering strong resistance zones using a unique approach. Let's dive right in. First, we rotate the chart. Why? A fresh perspective helps reveal hidden resistance levels that might go unnoticed in the standard view. Now we analyze price action carefully. Where does the market struggle to break through? Those are our key resistance levels. Next, we bring the chart back to its original orientation. This helps us validate our findings and ensure they align with overall trends. Finally, we take a deep dive into the price action. Are there rejections at resistance? Is volume confirming the zones? These factors shape our strategy moving forward. After thoroughly analyzing the chart, we've identified some strong selling zones. These zones indicate where sellers have consistently stepped in, pushing prices lower. First, we look for confirmation, like price rejection, increased selling volume, and bearish candlestick patterns forming at these levels. Next, we determine our entry points. Risk management is key. We set stop-loss levels just above the resistance zone to protect against unexpected breakouts. Then we closely examine price movements. Where does the market consistently find support and bounce back? These are our key buying zones. Next, we look for signs of strong buyers, like multiple rejections at support levels, increasing volume, and bullish candlestick pattern. We focus on how price reacts at support. If buyers are weak, the market could break lower. If the market struggles to recover, we will not reconsider long trades. And now we will wait for the market to open. We analyze buying zones in real time. If you found this helpful, don't forget to like, subscribe, and stay tuned for more trading insights.